Greetings to all. This is Neel Parekh, a technical research associate at GEPL Capital. Welcome to the weekly market outlook video. In this video, we are going to talk about the Nifty and Bank Nifty current market chart structure, and as well as we'll discuss the two stocks which have high potential to outperform in the upcoming series. So, without any further ado, let's start with the video. Yeah, so this is the weekly time frame of the Nifty 50 index. So if you look at the overall broader indices, it's been indicating a weak sentiment as Nifty has been maintaining its lower lows and lower highs formation for the third consecutive weeks now. And on the weekly scale, on the current week, if you look at index has formed a bearish candlestick, breaching below its prior weekly session low, which was at 25,372. That depicts the near-term sentiment still remains on a cautious note at a lower scale, to 25,100 would be an important support zone to be watched out as it's the gap area that Nifty has been formed on the first half of the Feb series, which has been at 25,100. Recently, zooming out on the current market phase, index has breached below its 200-day exponential moving average as well. So till then, Nifty is not recovering toward the level of 25,300 and 25,500. The resumption of a primary upward trend would get bit of a pause at a higher levels as Nifty has been getting resistance at higher level of 25,620. At a lower scale, 25,100 would be an important support zone. From there, buying interest could regain its momentum and it could breach toward the level of 25,650 to 25,700. Key noticeable trend would be on this index would be if an upcoming series Nifty breaches 25 able to breach 25,700, then potential next leg of an upward leg toward can be placed toward the level of 26,300 and 26,373. But till then, if Nifty is below 25,700, Nifty would be on neutral to negative zone. The momentum indicator RSI is also slipped below its 50 mark and it's maintaining lower lows formation and currently at 40. That also depicts the upside momentum has been lack on the daily scale. Moving to the Bank Nifty index, the Bank Nifty index still remained on positive to neutral zone. As on the weekly scale, if you look at it, it's still maintaining its highest pattern and it's been trading above its prior weekly session low as well as its inside bar pattern has been formed. So that depicts Bank Nifty still remains on the outperformance side and it's indicating a high relative strength index. On the daily scale, Bank Nifty has been getting a pause near to its 26-day exponential moving average. That depicts the bullish mean reversion could be placed if Bank Nifty rebound toward the level of 61,000 level. Then buying interest could regain its momentum toward the level of 61,500 to 61,750 zone. Now, sectors to be watched out for the positive momentum for the upcoming series. First one would be Nifty Oil and Gas Index. So if you look at the oil and gas index on the weekly scale, it's been forming a higher bottom formation. And on the current week, despite the current market volatility, it able to close on the positive side. From this, we have shortlisted stock as Chennai Petro. So Chennai Petro on the weekly scale has given a breakout of its two consecutive weekly session high breakout, and the RSI indicator, which is a momentum indicator, is being pick up toward the level of 61. That defines the breakout has been backed by the momentum. On the daily scale, if you look at, it's still maintaining its high top, high bottom formation on the daily scale. So at a higher scale now, 1040 to 1090 would be the target levels, and at a lower scale, stop loss should be maintained at 900 mark. Second stock that we have shortlisted from the oil and gas sector, which is an ONGC. So on the weekly scale, if you look at on the ONGC, it index has made a beautiful base near to its 100 peak exponential moving average. From there, we have witnessed the breakout on the initial Feb series. We have witnessed the breakout of its 1 year consolidation phase. And on the recent note, it's indicating a continuation of the primary upward trend. So on the daily scale as well, it's indicating a high top, high bottom formation and well respected its key short-term moving averages of 12, 20 and 50-day exponential moving average. So that depicts the trend strength. Even the RSI on the daily scale is at 60. So momentum is also backed by the positive trend. At a higher scale, 295 to 300 is the target levels, and at a lower scale, 270 would be act as a stop loss level for a better risk management. So in short, the Nifty and Bank Nifty trend, the Nifty trend remains still on neutral to negative side, but on the other hand, Bank Nifty trend remains neutral to positive side. So actionable setup on the Bank Nifty would be buy Bank Nifty above the level of 61,500. Target price would be 61,850 to 62,250 mark for the swing basis, and at lower scale, 60,850 would be a stop loss level to be maintained on the Bank Nifty part. On the Nifty side, actionable setup would be buy Nifty about 25,320 with a target price of 25,650, and stop loss should be maintained at 25,180 level. So this was the overview of Nifty, Bank Nifty, and these two stocks that we like as outperformance criteria and based on the relative strength and the statistical behavioral pattern. So we'll meet on next week to get some much of an upside and insightful scenario of the markets. Thank you.